This webinar is very pointed. It's going to be about the exchange traded fund that listed on the New York Stock Exchange today, this very morning. I was like a kid the night before Christmas last night. I couldn't sleep. I distributed a market commentary piece about a week back, or about a week and a half back at this point. If you came here today to get my musings about interest rates and the economy and where the stock market is headed, please just raise your hand, email our office. We recorded that. But today's presentation is all about the God Bless America ETF, again, that is publicly traded, listed on the New York Stock Exchange today. Here's our compliance slide. This will keep me in the good graces of Paige and all the lawyers out there. Make sure you read every last word of that. Investing involves risk. Our fund is an equity-based fund. So if you're watching this presentation going, hey, this seems like a good idea, but you're a very risk-adverse person, think again, it's a stock-based fund, right? So if you're not willing to take stock market type risks, you wouldn't want to gain too much exposure to the fund that we're about to describe. All right. So the overwhelming question that I keep getting asked when we did our little client event the other night was like, why are you doing this to yourself? You've got this beautiful family here and your business seems to be thriving. Why take on this project? Why put yourself under the light of scrutiny that we're already facing? If you read some of the mean tweets that have been written about our fund, and I'm going to talk about some of the other lights that have been shined on us later on in the webinar. But what I've seemed to have witnessed over the last, 5 to 10 years or so, is individuals who vote with their right hand have been getting mistreated by a lot of the world and the country's largest institutions, right? So Hollywood, academia, big technology. And then it started bleeding and creeping into my arena, which is Wall Street, right? And we witnessed that happen with the rise of ESG funds. And with the rise of ESG funds, we started to see companies become more and more emboldened to broadcast their political beliefs and their musings on all things social justice. They started becoming woke. And as someone who votes with his right hand, this was offensive to me. And it made it investing in these businesses harder and harder. I had to hold my nose. And I had several dozen conversations with clients in our office who all had the same overarching concern. And that was, I believe the American dream is alive and well. The stock market has been very good to me and my family. It's been a wonderful place for me to grow my money. However, I will be darned if I invest my hard-earned money into businesses that are trouncing on my beliefs, are saying things that I cannot agree with, and almost outright hate me. Like, you're investing your money in companies that think you're a deplorable. And unfortunately, in some of the early conversations I had with individuals, it was like, hey, part of investing in a low-cost index fund or a mutual fund, some of your money might just get siphoned into these businesses that are making these comments, and you kind of have to hold your nose because that's part of investing. And honestly, I hate that I even uttered those words, because it's not right. It's not right that if an individual says to me, I don't want to invest in XYZ company because they did this, this, and this, and Wall Street's response was, tough. We're going to spoon feed you these funds. If you have money in a state pension fund, if you have money in a large 401k, you're almost being force-fed companies that are trouncing on your beliefs. If you vote with your right hand, you're almost being forced to invest in businesses that hate you. So I said, someone's got to do something about this. Someone needs to fight back. Someone needs to make a statement so God-fearing, flag-waving conservative people could invest their money in businesses that they feel good about owning. And when I scoured Wall Street and I said, is there anything out there that exists that fits the bill? Are there any investment instruments that have already been created? Because I'll tell you guys, it would have been a heck of a lot easier if I were just to invest in something else. The amount of manpower and capital and energy and stress that's gone in to this project. Looking back, I mean, it was worth it on a day like today, but it's probably taken a couple of years off of my life, and it's only just begun. So I scoured Wall Street and there was nothing. Like there were some conservative-based funds, but they basically were like energy funds, right? Because they were like, hey, there's a ticker MAGA out there. And you kind of peel back the curtains and you look at the top holdings, and it's like energy and industrial companies. And if we've learned anything from the capital markets over the last 10 years, it's the technology sector, which has driven a lot of the growth. So I said to myself, someone needs to create a fund for the people that have supported my little business and the people who sing from the same hymnal as me. And that's how the fund got created. It got created on the backs of multiple conversations with clients at the planning table. This thing was literally created after my conversations with each and every one of you, the emails I got saying, hey, don't you dare invest my money in this business, or I'll be darned if any of my investments fall into the hands of this CEO. So that's why we created the fund. Now, some of you are going, well, what the heck is the fund? How does it work? I was talking to my parents, and they're awfully proud of me, but they were asking me some very basic questions that I just assumed, hey, I thought you knew how an ETF works. So an ETF is an exchange-traded fund, and it's essentially like a mutual fund that trades like a stock. So by investing $1 in the ETF, you gain exposure to 30 to 40 businesses, right? So in investing in ETFs, you gain diversification. ETFs are by and large lower cost chassis as well, right? Like a lot of active mutual funds are going to be incredibly expensive. It's worth noting we're going to be implementing the ETF within our clientele. It's going to represent anywhere from like 2 to 5% of our overall assets. So just a very small sleeve. Anywhere where we saw overlap within our models, we're basically integrating the ETF. The net result to our clients is a lower fee structure, right? Because if we manage money, we charge a 1%. But if we're utilizing the ETF within the model, we don't charge the 1% on that, and we charge the expense ratio on our ETF. So it's cheaper overall for our clients. Trading flexibility, unlike a mutual fund that you can't get in and out as the day goes on. Mutual funds are going to settle at the end of the day. You can buy this thing in the morning and sell it in the afternoon if you so chose. Also, there's no minimum. So if you've got, someone in your life who's just beginning to build their wealth and they want to gain exposure to an investment that has a lot of diversification across companies that they can feel good about owning, it offers a tremendous amount of flexibility. And then finally, tax efficiency. It's not going to happen this year, but I know last year and the year before, a lot of you got hit on the head with what's called a phantom tax. Mutual funds will periodically do a capital gains distribution. You're not going to experience that. So it's going to be a heck of a lot more tax efficient. But in essence, an ETF is a way in which you can invest your money and diversify it across 30 to 40 businesses just by owning one share. Right now, the shares are priced at $20 a share. So by literally buying one share, putting $20 into our fund, you are investing that $20 across, I think there's 38 companies right now in the fund, but the prospectus says 30 to 40 companies will ultimately wind up owning. So what makes it a little bit different? What we're doing is we're boycotting and eliminating businesses that are going out of their way to make social and political activist statements, okay? And I got to be honest, it hasn't been all that difficult to find these businesses. Like, they're not exactly hiding, and there has been a tremendous amount of hot button issues that have come across the newswire in the last 5 years or so. I'll quote a couple of them here. Florida's Parental Rights and Education Bill, right? This was immediately labeled the Don't Say Gay bill, when in reality, if you actually read through the bill, what the voters said, and this is the voters said this, right? So it's not like one fascist dictator anointed this on everyone. The voters said we should not be teaching sexuality, sexual orientation, anything surrounding sexualness to children 3rd grade and younger, right? Let's save it for the 4th and the 5th graders. If you're 3rd grade or below, we should not be teaching these types of lessons. Of course, the media and a lot of people with large megaphones called it the Don't Say Gay bill. And go figure, all of the publicly traded companies and the woke businesses followed. There were social media tweets. There was interviews with CEOs. There was press releases. There was talking heads television where spokespeople for some of the largest brands felt the need to come out and say that we don't agree with this piece of legislation and it's the Don't Say Gay bill. And in our eyes, I know this is some of the most challenging topics that humanity faces today. Like, look at those bullet points. These are some of humanity's most difficult questions. But in our eyes, it's not good business for a publicly traded company to take a side. And in doing that, you're offending or you're alienating 49 to 51% of your shareholders, your potential customers and your customer base, and your employees. So it's not good business to do these types of things. How about Georgia's election reform? Of course, after the 2020 presidential election, they passed some election reform, and it was immediately labeled Jim Crow 2.0, right? Even though in the 2022 primaries, there was a record voter turnout, record minority turnout. And right after Georgia's election reform was passed, there was 2 advertisements put into the Washington Post and the New York Times, and it was a pledge that said, "We stand for democracy." So a bunch of companies felt the need to virtue signal by saying, "We stand for democracy," kind of looking at you through their nostrils, and in essence saying that Georgia's election reform was racist and it was designed in a way to suppress the vote. And the facts have panned out that that's not accurate. It's not accurate. We've had a record voter turnout and a record minority turnout. So in our eyes, if you signed that pledge, you were participating in political activism and social activism. So we're going to boycott and eliminate those CEOs and those businesses who signed that pledge from our investment universe. Most recently, the ruling of Roe v. Wade, again, a challenging topic for humanity, but it shouldn't be used as a publicity stunt for a corporation. Number of corporations felt the need to do social media posts, in essence, gloating about how they were going to up their human resource benefits to allow their employees to travel across state lines to take the life of an unborn baby. So if you used Roe v. Wade in a publicity stunt, you will be boycotted. You will be eliminated from our fund. You wouldn't believe the number of companies that made sizable donations to organizations like Black Lives Matter. And Black Lives Matter, in our estimation, is not a social justice organization. It's a radical movement. And if you actually read their website and looked at some of the things that they stood for, anyone who had any level of common sense would see it the same way, right? These are people who are literally almost poo-pooing the nuclear family. And they took those bullet points down. And I think you're going to see a lot of news about Black Lives Matter in the coming days, that the funds were being mismanaged and they weren't being utilized in a thoughtful way. So if a corporation is donating shareholder money, now keep in mind, right? Because you might disagree with everything I say, but this is shareholder money, and a lot of that money was siphoned into these businesses through index funds, and the people who gave them the capital do not agree with these behaviors whatsoever. They're saying, no, I don't want you to Like, some hardworking person who just puts some money in a 401k and doesn't see Black Lives Matter as a social justice movement, automatically is getting their money invested in businesses that are turning around and taking their reserves and sending it off to. So if you're outspoken about these things, we're going to boycott you. There was a business roundtable pledge done in 2019. It was called the Stakeholder Capital Pledge, where before 2019, CEOs of businesses had a fiduciary duty to their shareholders. It was very simple. Hey, I run the company, you invest in the company. It's my obligation to run this business in a thoughtful way as to return profits to you. Well, I think some people thought that was not good enough, so they created what's called the Stakeholder Capital Pledge. And stakeholders include your employees, your suppliers, your community, your shareholders. Who else did I forget? Basically, anyone who's associated with the business. The owner or the CEO has a fiduciary duty to all of these various stakeholders rather than just the shareholder. And at face value, that actually sounds very altruistic, right? It's like, hey, that's actually pretty nice. Like, these businesses are looking after their employees and looking after their customers and their communities instead of just looking after the cigar chomping shareholders. Well, the Stakeholder Capital Pledge, in our eyes, swung open the doors to what are called ESG factors, right? And what happened was, one of those stakeholders was the community that companies operated out of and the overall environment, right? So all of a sudden, this stakeholder pledge starts slipping into the greenwashing that's happening throughout humanity right now. So now banks are being deterred from lending money to businesses that explore for and drill and produce oil. Even though America has some of the cleanest oil production in the entire world, US-based banks are not able to lend money so oil companies can run their business more efficiently. This also swung open the door to what we're seeing in companies beginning to assemble their workforce based off of the amount of melanin in people's skin or sexual orientation instead of just merit. Like, when we make a hiring decision around here, call me old-fashioned, right? When we make a hiring decision at my little rinky-dink company, we just try to find the best candidate. Like, there is no screening or process that goes into trying to find candidates of a certain race or sexual orientation. And in our opinion, if you're a business doing that, you're not doing what's right for shareholders and investors. You should be assembling your workforce as a meritocracy. The best candidate gets the job. The most effective employees thrive. And then finally, I think I got my point across. These types of things are going to lend itself to companies being boycotted and screened out. Some examples. Again, it wasn't all that difficult to find these companies. They're going out of their way to do this type of stuff. So Amazon was grandstanding about how they increase their employee benefits for abortions. Here's Microsoft with a tweet on their feelings surrounding the Georgia election reform and how they're going to fight for security and safety. Here's Walt Disney. They had something to say about the Don't Say Gay bill. In and of just calling it the Don't Say Gay bill in and of itself, you're making a political statement, because that wasn't the name of the bill. And then finally, everyone's favorite brown sugary drink, Coca-Cola, subjected its employees to How to Be Less White seminar. So if you're doing stuff like this, you're going to be boycotted. On the right side of the screen, you can see some of the companies. I mean, these are the low-hanging fruit. You'd be surprised some of the other companies that we were able to determine were doing things like this too. But Nike and Disney and Google, Pfizer, these are just a few of the boycotted companies. There's many, many more. So what's in the fund? Well, I was pleasantly surprised, because when I set off to do this, I heard from a number of people who follow capital markets, they said, Adam, good luck with that. There's not going to be any businesses left. Everyone has gone woke. It's good business for these companies to make edgy statements about hot button issue because they get more attention in the media and they get more clicks and shares on social media. So I was under the impression, I was worried, and a lot of other individuals said, you're not going to have any companies left to invest in. Well, I was pleasantly surprised that it was a vocal minority thing. No different than what I think we're experiencing throughout humanity right now. I think the majority of citizens in the United States are pretty darn close to the center, and I would probably say right about now, center right. And it's this vocal minority on the radical left that are steering the conversation by screaming foul and screaming victim the loudest. And the same thing happened when I looked at these businesses. It was a small group of companies that we had to eliminate. We had to eliminate and boycott. And then what was left over was a tremendous bundle, in my opinion, of quality comfort food businesses, wonderful businesses that were running their operations, staying in their lane, not feeling the need to sound off on every darn hot button issue via social media, or their CEO doesn't sign all these different pledges that are out there. What's going to make our fund a little bit different too, I talked about this at the beginning of the presentation, is a lot of conservative-based funds that exist today are heavy in things like industrials and in energy. And what you're seeing here is a pie chart of the overall weighting of the overall market, right? So energy really only represent about 4% when you look at stocks based off of market cap, right? Technology represents 26% of the overall market. So how can you be diversified? How can you have a investment that's invested across all the sectors of the overall economy if you don't have a sizable chunk of your money in technology names? Healthcare is 15%, consumer discretionary, 13%. So what we wanted to do with the companies that were left over is weight them according to the overall market. In essence, what we're trying to create is an index fund. An index fund with exposure to all 11 sectors, but is compiled of companies and businesses that are not making social and political activist statements. So what we did is we've selected 3 to 4 stocks in each one of these sectors, and then we weighted them according to the emphasis on the overall market of their sector, right? So if it's a technology sector, we're going to weight that stock a little bit more. And then some of the mega cap stocks, like some of the biggest brands out there, they represent like 5% of the overall market. And of course, some of those companies are the ones that we had to boycott. So we're also weighting the portfolio based off of that particular company's market cap. But in essence, what we're trying to do is put together a portfolio that hits all 11 sectors of the overall stock market, and then weights the stocks and the sectors accordingly. So it should replicate the overall market as closely as 30 to 40 stocks possibly could. Hope that answers the question. Here are some of the top holdings. Okay, so Tesla, Nvidia, Amgen, Costco, Danaher, Schwab, Applied Materials, Boeing, and there are many, many, many more. Okay, so this is where it's going to get challenging for me, right? Because I know that many of you will look at some of these names and go, oh, I don't, Tesla, for instance, is an incredibly hot button issue. I know some people, they dislike electronic vehicles, like electric vehicles. They think that they're being force-fed them. And, my rebuttal would be Elon Musk is an absolute American success story. The man is standing up to free speech more than anyone else on the face of the earth, which I believe is inherently an American principle and American value. And he's the person who's probably fighting for it more than anyone else. They are a tremendous job creator, and it's the American dream realized. I mean, the man took $70 million and went all in on Tesla, nearly went broke multiple times. And now it's one of the most successful businesses on the face of the earth. And I can go down the list on all of these companies. And you might say, well, hey, I knew a guy who worked there and he was awfully, progressive. Like when we put the portfolio together, we used a number of events. And these were some of the biggest hot button events that came across the news wire. And if these businesses did not make public statements, did not make comments on these events, they were available within our investment universe. Another thing that we did too, which I didn't touch on, is we're compiling the portfolio based off of price to earnings ratios. So naturally, we're going to look for stocks that are relatively cheap relative to their peers. Now, of course, PE ratios in the utility business are very different from PE ratios in the technology business, right? So we want to lay them next to their peers. We also want to look at forward-looking PE ratios, right? There are some businesses, Tesla being one of them. I already see the Twitterverse sounding off about why is Tesla has a high PE. Well, Tesla's a relatively new company and they're disrupting one of the largest industries in America. So when we look at the forward-looking PE for Tesla, we still think it's a relatively inexpensive stock. And then finally, whenever there was a tie, like if there were two businesses and we said, hey, we like both of these companies. They are both well run. They have similar valuations. We're going to pick the company that employs more people. And this is very controversial in my industry, right? Because most Wall Street people, analysts, and people who read quarterly reports and P&Ls and balance sheets, most bean counters look at payroll as an expense. And it is one of the largest, if not the largest expense most companies sustain. We believe two things. One, nothing helps the American economy more than jobs, right? I know big evil companies are regularly, chastised for being terrible employers and they're awful to their employees. I am the product of a father who worked at one of these big evil corporations that provided his family with health insurance and an employee stock purchase program and a 401k and a certain number of vacation days, and enabled him to put 5 to 10% of his pay into his 401k and become a millionaire because of it. So if we're serious about loving our country and we're serious about wanting to see the American economy thrive, we want to invest our money into businesses that are creating jobs. And we don't look at job creation as an expense. We look at it as an investment. Good people are what cause companies to thrive. You cannot thrive in the incredibly capitalistic, shark-infested waters without tremendously good employees. So that's the last piece of weight that we put in compiling the portfolio. So let me get sappy here for a minute. This was supposed to populate in like a wave type way. If you look at the top left corner, this is truly a dream being realized for me. And my parents took me on a day trip. I grew up in Connecticut, so they took me on a day trip to New York City. We were trying to figure out how old I was. I think we reached a consensus. I was about 8 years old. And you used to be able to take a tour of the New York Stock Exchange. And we took a tour of the New York Stock Exchange. I didn't know what was going on. I'm 8 years old. But I was enamored. I didn't know what a stock was. I didn't know what a bond was. But I saw people running around and holding paper. This was back in the open outcry days. There was no internet back then. No like electronic trading of stocks. And I was just infatuated with the energy of that place. Like I said, I don't know what these people are doing, but I know one day I'd like to do what they're doing. And I literally was hooked. Like I started investing in stocks and researching stocks like shortly thereafter as a little weirdo, Doogie Howser or something. So that was when I was 8 years old. Then fast forward, went to Drexel University, had an opportunity to work on the Philadelphia Stock Exchange at Drexel. And when I was graduating, I needed to put together a thesis statement, right? And the thesis report, I had to create an investment company. And the investment company, I named it AC Investments. I wasn't very, didn't have much of imagination back then. Well, I guess we're not too far off Curran Financial Partners, but and the premise of my investment company is I was going to manage my clients' money using a relatively new and novel investment instrument called an ETF, an exchange traded fund. These things just were invented, and there were probably, I don't know, 100 of them. Now there's thousands and thousands of them. So I was going to create an investment company and manage people's money using ETFs. Fast forward nearly 20 years later, there I stand here in front of you today, and we've launched an exchange traded fund on the New York Stock Exchange. I told you I was going to get sappy. I would be lying if I haven't welled up a couple times today when the opening bell rang, that this has been a dream realized after 32 years. And I can tell. All I can tell you is the American dream is alive and well. And it's amazing how much time it took to become an overnight success. And if you've got grandkids, no matter what they're into, or children, you know, I know that this isn't a story they're going to make a Disney movie about, but I hope you guys can tell how meaningful it is to realize that if you put your mind to something and you put your nose to the grindstone, and maybe most importantly, you surround yourself with excellent people, this thing never would have happened without my team in my office. They did things that I just don't have the attention to even focus on. I know Paige is watching this right now. Maybe you can share a tear with me too. And then lastly, you, each and every one of you who put a little trust in my little American dream, my little business, when there wasn't all that much to trust. Some of you hired me when my office was in the cafeteria of the Earth Fair. Even individuals who are hiring us now, newer clients, right? You have so many options. You could work with every big investment company, every big bank out there, name brand companies that have commercials during the football games. And you chose to work with our little small business. So none of this would have been possible without you. And I just say thank you from the bottom of my heart. Thank you. And I also have a favor. I need your help. So if you, this would have looked different if all the different things. So behind these ugly pictures of me, there's a bunch of headlines. So of course, because the name of the fund is the God Bless America ETF, it's the first financial instrument with the word God in its title. And that's across like over 400,000 different investment instruments. We are the first product on Wall Street that has God in its name. So, of course, being though that's called God Bless America, and patriotism triggers a large segment of humanity now because they think America is a flawed nation that has done more bad than good. It has not been greeted with positive press, right? If you Google the God Bless America ETF, I would argue to say 9 out of 10 funds have discredited our ETF as thematic, right? This is just a cute idea that the conservatives are thinking about doing, and it won't gather any assets, and no one's going to invest in it, and it's overpriced relative to a 5 basis point, index fund. And I think these individuals, Wall Street, you look at the Wall Street epicenters, mainly in bright blue liberal cities, and also the media epicenters, the same places. These people think God-fearing, flag-waving conservative people are unsophisticated and unenlightened, and they aren't as sharp, and they can't wrap their heads around finance as well as they can. And I think they're wrong. I think our fund is plenty sophisticated, if not more sophisticated than so many investment instruments that these wholesalers call my office every single day asking me to hawk upon our clients. So we need your help. We need your help spreading the good word. These 2 tweets that you're seeing in front of you, I did a podcast with a guy from Bloomberg named Eric Balchunas, and we're going to be broadcasting that in the coming days. But I put it on Twitter, and Twitter censored the podcast, or excuse me, censored the tweet. They said, hey, my tweet was getting ready to do a podcast with Eric Balchunas about the God Bless America ETF. It's coming soon. Y'all stay tuned. Apparently that was triggering. Maybe someone reported it, but that needed to be censored. They literally took it down from the public eye. Then fast forward a couple days later, I decided to get my hair cut off, to some people's chagrin, and some people going, thank God you did that, man. You were looking a little mangy. I got my hair cut, and I posted a tweet about getting a haircut. I said, big things happening in the next few months. Brace yourselves. 4 followers. I had 4 people following. By the way, if you're on Twitter, please follow me. I could probably quadruple my my number of followers purely from this little webinar. And purely by saying I'm getting a haircut because I have good things coming, they literally censored the tweet. So this is what we're up against. By me promoting a fund that people who vote with their right hand can feel good about investing, 9 out of 10 articles written about the fund are negative, poo-pooing it, saying it's hokey, saying it's thematic, saying it's for unenlightened people. If I try to share the message on Twitter, they're censoring my messages. Do you see a problem here? If I was doing an ESG fund, all the big media would fawn over me. They'd be like, oh, look at the ESG is moving down south. Finally, those backwoods South Carolinian rednecks are investing in ESG funds. But when I do something like this, the media poo-poos it, immediately discredits it as unenlightened. This is what we're up against. So I need your help. I need your help because I'm not going to get positive media coverage. Heck, I had 2 different PR companies, right? Because they saw how viral the initial prospectus went. Like, I'll take a look at this. I'll think about representing you, Adam. 2 different PR companies said they couldn't represent me because my message was too triggering to their workforce. They said, I don't want to go near this project because it's going to offend our workforce. Now, I'll ask you, was there anything that I just said in this, I don't know how long this presentation's been, darn near an hour, 38 minutes or so, that you feel as though if you were a young PR employee, would you ever have the gall to say, oh no, what this guy is saying is racist and misogynist and chauvinistic and fascist and all the other terrible words that have been thrown at me? If you want to get a good chuckle, jump on Twitter and look at the names being cast at the project and cast at us. It's almost lost its it's not as shocking as it once was because it's kind of boy who cries wolf. If you do anything in this vein, you're going to get those types of insults cast at you. Some of the most despicable, diabolical words in the English language have already been cast on us purely for creating an investment instrument that's designed for people who want to invest in businesses that aren't making activist statements. So I need your help. Please forward this video. We're going to make this video available. Hopefully it gets through compliance. They're probably going to rip it apart, but hopefully they take pity on me. So we'll be sending the video out in about 3 days after compliance sinks their teeth into it. Send an email to friends and family. If you're watching a football game or you're at a barbecue, spread the good news. Spread the good news that the American dream is alive and well, that this fund, by the way, the ticker is YALL. It's taken me this long to come up with the ticker. This fund, born and bred right here in Charleston, South Carolina, is available to investors all across the world. In fact, I just asked Nikki to order like a push pin map. I want to have investors in all 50 states across the United States. So spread the word that this thing exists, and it's something that investors can feel good about owning again. Share it on social media. We wrote we're calling it Your Patriotic Guide to Investing. I got to be honest, it's kind of just a brochure for the ETF. It's like 8 pages. But it basically explains everything that I just covered in this webinar. And you can request that guide by going to etfyall.com. Again, etfyall.com, or just leaning into our office. Call our office up. We'll send you a couple hard copies. Hopefully everyone got their t-shirts. If you came to our client event in Charleston, we gave out t-shirts. If you were unable to make it, raise your hand. We're doing another event in Myrtle Beach on Thursday. So if you're in Myrtle Beach, we're going to be giving those shirts out. So raise your hand. We'd love to get those shirts out in the mail to you. And again, thank you. This is a dream of mine. And because of you, you've made it a reality. And my family and I cannot thank you enough. And all, praise goes to my team for really being the people who moved the ball down the field and made this thing a reality. So God bless America. God bless South Carolina. And God bless America, y'all. Thank you so much for tuning into our little webinar.